What is going on? Welcome to my channel. I'm the covered call guy, and my goal here on this channel is to create 120,000 in annual passive income. I am doing that by currently using covered call ETFs. Right now, my projected annual dividend / options income is $76,000 a year, 6.3K a month, 1.4K a week, and about $200 per day. Legal disclaimer before we start this wonderful video today: this content is for informational and educational purposes only and should never be considered financial, investment, or tax advice because I am not a licensed financial advisor, investment professional, or tax expert. All opinions expressed are my own and may be inaccurate or incomplete or just flat out wrong. So please always conduct your own due diligence and consult with a qualified licensed professional before making any financial or investment decisions. Remember, guys, I am just some random idiot you found on YouTube, and I could be completely wrong. So remember, I am YouTube certified, nothing else. All right. So with that out the way, today's video is going to be on NEOS S&P 500 High Income ETF SPYI and how the power of $10,000 and the power of now, right? So we are going to imagine taking $10,000 investment and turning it into a reliable monthly paycheck that hits your account every 30 days, okay? Now, of course, $10,000 may not seem like a lot, especially for those in America, Europe. Obviously, I'm talking about in a general sense for if I'm an American, we're in America, right? So for the most part, if you're in South America or other places in Southeast Asia, $10,000 might be what you make in a year. So it might take you a while, right? But for the most part, $10,000, I'm talking about the Western standard here, right? You can hit $10,000. You can get $10,000. It's just a matter of how much you want to sacrifice to get $10,000. But we're going to talk about the power of $10,000, your initial investment, and then nothing else, and how that could really change your life. Yes, with just $10,000. So I just want you to imagine this, right? Regardless of whether the market is up, down, or sideways, I'm going to get paid. For most investors, growth is a waiting game, a number on a screen that you can't touch for decades. But with NEOS S&P 500 High Income ETF SPYI, ticker symbol SPYI, growth is realized immediately, right? My verdict here, straight up: why wait 10 years for wealth when I can live on it starting next month? How are you going to tell me that getting a 12% return a year of $10,000, at least $100? I'm saying now it could be more, but let's just say even number here, $100 per month. How is that not growth? Because if I don't touch it, am I not growing from $10,000 to $10,000 and $100, and then next month $10,000 and $200? That's growth. In my view, that's growth. Is your $10,000 not growing? To me, that's faster growth than waiting decades. I'm getting growth every single month, every 30 days. We can go ahead and dispute that in the comments too. All right, so the power of now defined, right? The 10-year wait. Investing $10,000 in a traditional growth SPY means watching a graph go up and down for a decade, right? So I hope I can sell at a profit in 2035, 2045, 2055 versus the 30-day payday, right? Investing $10,000 in SPYI means getting a notification next month. My internet bill is paid today. Realistically, probably internet bill and a phone bill, right? $100. Right, so I'm talking about, if you're single, right? Obviously, you would need more if you had a whole family. That would be completely different. That would be up to you to invest maybe $15,000. All right, so my mindset here is that real wealth is about utility. If I can't use it, is it really mine? Every 30 days, I get to use it. And we're just talking about $10,000, not even reinvesting. Just use the $100 every single month to pay your bills. How is that not growth? You're getting $100. You're growing $100 per month. Now, that's up to you to reinvest a little bit of it to grow even more. But if you don't, that's fine either way. It's the power of now. You are using it now. You're living your life now. All right? Why later is the enemy? We're talking about in a classical economic theory here. Time preference describes how much I value getting money now versus later. My argument aligns with a more rational preference for realized gains, right? Grounded in the uncertainty of the future. The philosophy behind my thinking is, instead of waiting 10 years for growth, why not wait 1 month? I'm waiting 1 month. Every 30 days, I get to pay a bill. I get to go on and cross something off my, get some bills off my shoulders. I get to live a little bit longer. I get to live the next 30 days, right? I forget about the internet and phone bill. That's off my checklist. Right? Debt collectors not coming after me for those, at least. Right? The risk of the finish line, right? Traditional investing subjects me to the endpoint risk. The danger is that the market may be in a drawdown at the specific moment liquidity is required, right? Let's just say in year 10, you're about to, finally retire. After 10 years of growth, you're ready to take out. Well, that year you might be screwed if the market tanks and takes a complete nosedive. Right? So in contrast, SPYI transformed the potential energy of market volatility into kinetic energy of monthly cash distribution, right? So what I mean by kinetic energy is just monetizing roughly 1% of the principal value monthly. I effectively de-risk the sequence of returns, okay? That's it. I get to use that 1% return every single month. It's actually hitting my bank account. I'm using it. I can cash it out. I can do whatever I want with it. Right? But what about the misgrowth? Yes, I talk about the great. This is very unfiltered, unbiased. I tell you how it is. There is the other side of it, right? So there's the critic, right, which says, but the miss on growth, right? They refer to the opportunity cost of capping the upside potential compared to a raw S&P fund in a bull market. However, I'm going to say this miss must be weighted against the certainty equivalent, right? We're using SPY from SP 500. Offers probabilistic growth. The expected return is high, but the variance is massive. Versus SPYI, the high income, right, offers a contractual income derived from option premiums. There's always gonna be a cash distribution from SPY. I mean, look, $15 trillion in it or more, anywhere from 15 to like $35 trillion, money flowing in and out. There is going to be, unless the world burns, where's that? It's not going to go empty. I really highly doubt it. There's like a 0.00%, 0.001% chance. It's you're going to get paid. It's just how much you're going to get paid is of course the variance there. But you're going to. All right, so that's the trade-off here, right? The certainty of my $100 monthly payment provides a utility that exceeds the uncertain extra appreciation. Okay, that is the misgrowth. The critics, in a sense, all right. You just have to be willing to accept this misgrowth in exchange to be able to live your life now. And when I say misgrowth, I don't want to say that you are missing on actual growth, because $100 per month is growth. It's just a matter of what you do with it. Okay, it is growth. But when we're talking about misgrowth, we're talking about like 10, 20, 30, 40x after 40 years, So it's just a matter if you want to wait 4 decades. All right, so the power of flat markets, okay? So what if it doesn't grow? What if we're in a flat market, right? SPY return with dividend only 1.5%. Okay, look at that. Versus SPYI return of a premium in a flat market of 12%, right? This distinction is particularly relevant in flat markets where price appreciation is zero. The flat market winner in a sideways market, SPYI's destroys SPY mathematically. There's no but if whatever. SPYI completely dominates SPY. Growth, right? We're talking about growth, right? Well, here it is. All right, so let's check under the hood, right? What is the engine that powers this, right? So determine if the $100 per month is sustainable, right? I must dissect the engine. It is critical to distinguish between SPYI from the first generation type of cover call funds like QYLD. For those who are not new, I talk about this a lot, right? For those who are new, stay away from the Gen 1s. Right, they use rigid strategies that often lead to capital erosion. Go check the charts. It's right there. It's true. I don't have to really dive into it. Pause the video for 5 seconds, Google it, and you'll see it. SPYI employs a more updated, credit call spread strategy, which is fundamentally different from a simple covered call ETF, right? So the third generation tech here, this isn't your grandfather's covered call fund, right? It's not like it's, 10-15 year type of strategy, 20-year type of strategy that they realistically use. Is very passive. All right, so how the strategy works, quick explanation here for SPYI, right? So long equity beta, right? The fund holds stock replicating the S&P 500. This is the engine of growth. If you're worried about it, you still have some growth here. The short leg, the fund writes, which sells call options on the SPX. This generates the premium, the cash from a monthly distribution, right? And then they have the credit call spread, right? The long leg, SPYI uses a portion of the premium to buy call options at a higher strike price. This is the open. This reopens the upside exposure, right? So this allows, okay, you talking about growth here again, right? I want to hammer that in. Oh, but the missed growth, right? This gives the V-shaped catalyst, right? If the market rips higher, the long call gains value, allowing the funds to participate in the rally. All right, so stop buying dinosaur ETFs, right? Stop comparing our great, amazing SPYI, QQI, all these Gen 3 with Gen 1. As you can see the difference here, right? The evolution in Gen 3, right, with $10,000 can really change your life here, right? SPYI represents a more sophisticated evolution in income investing. You can see it here. Strategy at the money, long, short call spreads, upside, hard cap, soft cap, tax efficiency, nothing, very high NAV profile, chronic erosion, very, very resilient in a bear market, and a very strong recovery in a bull market with a V-shape capable. If you've seen it in tariffs, you've seen it. Right? The secret sauce, right? Active management, right? Unlike passive indexes, SPYI is actively managed, right? So high volatility in a bear market. When markets crash, volatility spikes, premiums become expensive. SPYI can sell calls further out of the money and still generate that 12% target yield. Low volatility in a bull market, managers actively roll positions to mitigate the drag of capped upside. They've been doing this and performing this very, very well. They're starting to have a decent track history, so go ahead and look at the track history here. All right, they have a very strong strategic agility, leaving more room for the NAV to recover when it matters most. You've seen that V-shaped recovery. All right, the cold hard math, right? $100 beats nothing, always, and will always be true. 12.04% annualized distribution rate as of 2025, giving you about roughly $100 monthly payout on $10,000, right? Monthly payments have hovered between 0.46 cents to 0.53 cents per share. This confirms the stability of this income stream. What more do you guys need, right? The total return analysis is that 100 per month is growth, even if you don't reinvest. If you get $100 per month, now you have $10,000, $10,100. You use it, now you have $10,000. The next month you still have $10,000, $10,100. You use it, now you have $10,000. The third month you don't use it. The fourth month you don't use it. The fifth month you don't use it. The sixth month you don't use it. It grows. Is that not growth? Let's debate that in the comments. Is that not growth? Is your not initial capital growing? I need to hear it. I need to hear this in the comment section. Is this not growth? Because I just don't understand the true growth naysayers. Oh, you're missing out on the growth. But every 30 days, my money is growing. Is it not? The NAV have been quite stable for the historical data. You can see the recovery, especially if you dollar cost average. You have been way up on your initial. All right, SPY versus SPYI. I'm going to give the quick showdown here, right? So, again, I talk about the good and I talk about the bad, right? So, the metric here is cumulative return. SPY with S&P about 80%. SPYI high income about 60%. The difference is about 20%, right? SPYI does get completely demolished here. Annualized return. SPY is about 20. SPYI is about 15. The difference is about 4.20, right? So, comparing SPYI to SPY, since SPYI's inception in August 2022 to early 2026, this is the cost of insurance, right? The miss is real at 4.2 annualized, but I've paid that to receive monthly liquidity and downside buffering. Now, all of this, of course, completely dependent on how much you reinvest and dollar cost average. We're just talking about you spending all of the money here. And I busted this before, but I'll talk about it again, right? Myth busted about NAV erosion. In 2024, the fund earned more than it paid out. So total return NAV was about 20%. Distribution rate 11.76. Net result, you had NAV growth of about 7.28%. The NAV did not erode, it appreciated. This has shown resilience, right? This is verified. It validates my claim that the NAV is resilient. Capturing the V shape, I talk about this. This is extremely important because for the naysayers, oh, but what happens when it crashes? Can it still capture the upside and reclaim the NAV? Yes, it's shown that it can. It had a 77% upside capture rate and also a 70% downside capture rate. The fund recovered faster than it falls relative to its own beta, allowing the NAV to reclaim high watermarks over time, right? So this is enabled by part of their long call strategies, right? Their long call position, that's the part of the strategy. It gives you the asymmetric return here, right? So you captured 70% of the upside, but only suffer 70% of the downside. So that difference there, you're still up. You're able to reach higher and reclaim your NAV and or go above it. Okay, the hidden multiplier, taxes. The strongest argument for SPYI as a growth vehicle is the tax efficiency. SPYI uses the SPX index options, which leads to Section 1256 contracts. For those who are new, this just means the gains are split 60% long-term capital gains, so you're maxed out at 20%, and 40% short-term, which is maxed at 37%, which is like ordinary income, right, at the highest tax bracket. The result, you have a maximum blended federal tax rate of roughly 26.8% compared to ordinary income funds, right, maxed at 37%. You keep more of your money, and the IRS hates this simple trick. Right, it's a good compounding effect. Once you understand that, okay, let me just tell you guys something. Let me just say this. Don't forget this simple concept, right? Money makes money while time passes. Once you get that programmed into your head and understand interest, dividends, and compounding, the sky is the limit. And right here with $10,000, you're compounding every 30 days, and depending on if you want to reinvest that plus a little bit more, by the end of the year, depending on how much you invest, you can turn that $10,000 easily well above 30. By second year, 30, you can double to 60 or even more. From 60, you can push around 80, 90, and by year 5, you have well over $100,000. It's very dependent on what you do, but $10,000 could really put you ahead. And of course, depending on where you live, of course, right? I'm talking about, some countries $100 could still go a long way. It's not going to give you the luxury life, but I'm pretty positive $100 in certain countries, US dollars, can still, it's some people's monthly income. That puts you way ahead. Of course, I'm talking about the Western lifestyle here for the most part. $100 pays you some bills, right? If not two, then one. Right, so how I plan to pay $0 tax today if I had the $10,000 in SYP, right? So in 2024, I'm going to say about 94% of SPYI's distribution was classified as constructive return of capital. That means zero taxes due today. The benefit, I received $100 cash today, but paid no tax until I sell the shares. The tax equivalent yield for that, because for a high income earner, a 12% yield that is mostly tax deferred is equivalent to 18.5% fully taxable yield, right? That is the rock magic, right? The massive tax alpha boosts my real world growth rate. SPYI versus the world, right? Right now we're going to compare against JEPI and XYLD, a little bit more, slightly better cover call ETFs. However, the winner here is still SPYI. Completely dominates because of tax efficiency and upside capture. To each their own. I'm not, drowning out JEPI. I'm not drowning out XYLD. To each their own. They have their own strategies. I would say It's okay to even own all three. It's just very dependent on how you want to play your portfolio here, right? So as you can see here, SPYI completely dominates. I'm pretty sure SPYI would completely dominate any other S&P cover call ETFs. All right, my bills. I'm saying it again, right? My bills paid $100 per month. This isn't just a percentage, right? It is a bill erased. It covers high-speed internet or a significant portion of a monthly grocery run, depending on what you buy, you know, how expensive you want to go. That, or if I don't touch it, it's $1,200 per year. Without touching my principal, my investment pays for a weekend getaway, a holiday gift, or a minor home repair, depending on what beater car you have, or what beater car you want to buy, how old it is, how many mileage. It could be a down payment for a car. The investment moves from a source of anxiety, which I have anxiety, right? So it helps me, right? From I hope the market moves up, to a source of support, right? I know the check is coming every 30 days. I'm expecting what SPYI QQI pays what the first week of every month. So I'm expecting at least the first week of every month I get hit with a nice check, right? Concrete utility, right? Standard total return provides zero immediate utility. You cannot eat unrealized gains, and that's the most important part I'm trying to hammer here, right? $100 can do a lot of things, just depending on what you want to do with it. I keep saying this over and over again in the video, but hope you don't get tired of it, because I'm trying to hammer this home. Right? Of course, I'm gonna put it in quotes, right? The infinite money glitch here, right? All right, that's just a gimmick. Okay, don't take it for like I'm actually saying infinite money glitch, but it, for the most part, it kind of is. I mean, SPYI is always going to make money on SPY. I mean, the trillions of dollars go in and out, volatility is there. You're gonna get paid. You're telling me, again in my previous video, you're telling me you can't make 1% a month? I mean, you should just dissolve your own hedge fund here. As you can see here, right? House money. By year 5, I have banked 60% of my risk. Even if the market crashed 50%, I'm still profitable, right? Month 1, $100, 1%. Impact, a nice dinner out. Year 1, right, $1,200, right? Cooped, 12% recouped. Impact is weekend vacation. Year 3, $3,600, 36% recouped. Used card down payment. Year 5, $6,000. You've recouped 60% of your initial investment. I'm not going to say financial freedom here, but, it just depends on how much you reinvest and put here. And sleeping like a baby. Swan, right? Sleep well at night. The regret trap. Selling shares of a growth stock during a downturn feels like failure. It creates regret and panic. The SPYI solution. When the market drops, the distribution continues. Receiving a $100 check during the market crash validates my decision to stay invested. For me, I'm always going to dollar cost into SPYI or QQI. Right? It's a behavioral alpha here. This is dependent on how well of a investor you are. Right? This prevents panic selling. The peace of mind is not just emotional. Right? It preserves wealth. You execute correctly. That's on your part. Nobody else. Nobody can hold your hand on this. This is how you build the wealth. But what could break my machine, right? The melt up in a vertical bull market, right? 2020 to 2021, SPYI will lag. The short call will drag performance. Low volatility. If the VIX does drop below 10, right, option premium does shrink. Yield might drop to 6 to 8%, reducing the $100 payout. This is something you do have to keep in mind. It is very, very important why I would say, hey, look, if you don't need the $100, just reinvest it back in until you do need it, right? And of course, tax code, right? Legislation changes could erode the Section 1256 and Rock benefit, but I really doubt this is highly going to happen. Alright, so the risk here, it is not a magic bullet, right? Know the risk, okay? Nothing is perfect. Nothing is guaranteed. If it was, everybody would have just went in on this. There's no point of me making this video. Alright, my final verdict, right? $100 per month, $100 per month on $10,000, valid. It is supported by the current yield and the current payout. Income is growth. I'm going to say it's valid. In flat markets, this is the only growth. NAV resilience, I'm going to say it's valid. Evidenced by 2024 NAV growth. Why wait 1 month? I'm going to say it's valid again. A rational preference for liquidity, for paying my bills, for actually using the cash. All right, that comes to a conclusion of SPYI is a lifestyle machine. It converts abstract volatility into tangible monthly paycheck. And if you agree, disagree, hate it, love it, still give me a subscribe, right? Don't miss out on the next money printer video. I'm thinking about it. Leave me in the comments, topics that you want to see. If you like stuff like this, let me know. Leave in the comments videos that video topics I should make. I take it all to heart. I take it all to appreciation. I really take everything into account, and I really go through the comments, and I read it, and I start formulating what you guys want to see. Otherwise, you're gonna get a whole bunch of other stuff that comes on my mind. So if you want to see a particular topic, let me know, and be as specific as possible. That makes it easier for me, and it makes a better video for you. So thanks, guys. Give me a like, leave a comment. Catch you guys on the next. Thanks for watching. Stay tuned.